Damn. Morning. I'm not awake at all.
His name is John C.
Damn! Can't believe this is. I'll have to watch today. Bitcoin juice and got this little swing here I did. Shares. Jeez, shares. Damn it. Shiza! Son of a bitch. Good luck today. I just woke up 30 minutes ago, so I'm not here yet. My brain's not awake yet. Look at GME. DON, what a ripper. DFVN or DFDV. Oh my gosh, freaking parrot too.
Billy, mother-in-law coming in town for the weekend. Wish me luck, boys.
Coin juicing. I might need to let that percolate a little bit. I took the wrong strike on these GME calls. One of the 29s. Yesterday's high was 29.19. I'm still waiting for GME to wake up as a freaking crypto play. And there's Cheese. Is it actually possible to not pick the wrong strike? Yes, it is. Cheese, you're not giving me any credit for swinging shares overnight. Kiss the ring. KDY juicer. And this is rejecting. I got filled at 30. Oh, shit. Damn. Oh shit, we're over the big level, 31.45, and I just sold. Damn it. Cash it in the swing. Oh shit, my LTRY. I forgot about it. All right, cashed it in. Whew. All right, how much did I make on that? $800. It's good. We're at a banner. All right. All right. DFTV. Wow. Bond on. I don't know what the news is on Bond, but it's breaking some dailies.
Robe is coming out today, boys.
Oh my.
All aboard the gravy train.
Shit. Unbelievable. Urban, absolutely monster moves here. UNH. Yeah, it's not. Doesn't do it for me right now. It's not fresh. Oh, ASST. Yeah. Of course, get it right at the high. Get over the level. Did it break it? Yeah, it did. Or should it fill? Gotta go. Can't just sit here. Now it goes. Give me a pullback. G me with a W. And after this candle closes, KDOY. Wow. That thing's juicy today. ASST pushing. No, don't go, don't go, don't go. Give us 5 seconds. Wait, chill. Damn it. No W. Kenya white, very juicy. Is my TA moving up? It's got a daily potential on this one, actually. Do I not have any settled cash? 4,000. Okay. Oh, there's an offering on it? Shit. All right, we got 627 here on SYTA. Looking, I already have in the swing count, but I'm looking to trade it now. Jimmy still has a W now. Check this out. Over 75. Horseshoevilles, of course. Top ticked it. Come on, Jimmy. ASST breaking those levels. There's a break on SYTA. There's the daily level right there. Well, it tapped it. It didn't break it. 628 is the level. KDLY. 1 minute was beautiful. There's your 34. Oh shit, Jamie went. Today's high 29.19. ASST juice and still. Bitcoin 111.5. Like watching the game tonight? I don't know. Probably not. I'm not interested in Panthers, Hurricanes. Stars, Oilers. That's a fun series. Urban's got a little build up here. DFDV curling to the highs. We're looking at them. News at 9:45. I don't know what we got today. 10 o'clock, we got existing home sales. Initial, what was the initial job? In line? Basically. PMI is at 9:45. That shouldn't move us. We'll see. ASST 1 minute. And it fails. Wow. It's a cock and drop. DFDV 5 minute. Chicka bow wow. Good hit. Good. Good morning to you. Nice call on Bull there, Nick. Or Titan. Kraken is offering tokenized stocks. It's so funny, man. I traded, whatever you want to call it. I can't remember the name of the token. There was a company back in 2018 that wanted to do that. I was like, yeah, that's actually genius. And probably folded because they didn't have funding or whatever. But I knew that was coming. GME with another W. That's 28.91. DMDV. Wow, juice. No, it wasn't loop ring. It's actually 92 break. No. Oh gosh. So now we're just gonna drop the bid with no volume. What are we doing here? Break it. Oh, did we break it? What the heck? This thing isn't moving right. We did break it though. I get it out. This thing is like just moving all around without any volume. DFDV went to 4150. Holy shit. SYTA. It's got some stuff here. That was a wild move on that DFDV. All right, little structure here. We cucking? No, no real cuck. I want to see a cuck before I go long. I might long here and add on that break. Ideally, we get a cuck first, though. All right, there's our cuck. Now hold. Don't do anything. Just hold the 95. And we're going to cuck and go. Cuck and go into a cock. Into a W. Ready, break. All right, we got a level here, 1040 on ASST. See if it can do it. No, I just bought 4,000 shares. I didn't even blink at that level. That would have been a MACD flip too. So I was eager to get in. Good exit. All right, I didn't get hurt on that. Still want to see that 1040 break. Okay. SYTA 5-minute. Yeah, it's still holding up very nicely, but it needs time. So we're going to give it time. Come on, MACD flip, high day, 1050 break. Yesterday's high, 10 and 90. A cuck here would be fine with me too. Are we still green? All right, we're still green. DFDV open. Dip and rip on it. Thing's wild. Now I bought the right call. $30. $0.10 spread, and I get filled right. Okay. We're in it. We're in it to win it. Come on, high day. It's right there. No! Oh, good fill. Ooh, E-Trade. You about tried to dick me there. You tried to dick me, turd. All right. This should not be struggling like this. Here. Come on. Every time that bid gets close, it gets smacked. All right, over 1040, I'm along. Again. DFTV, 1 minute. 1 minute play on that. Looking for 45 break. That's a dip and rip. You give me the freaking rip part. Over 46. DFDV juice. Come on, 46 break. You have to do it. Starting to hold. Pressure this 1045. Nope. Couldn't do it.
Up 1K this morning. Think I'll call it a day. Thanks for the great content.
Philion, let's go. Congratulations, man. It's starting to get smacked again. There we go. There it is. High there, 69. I don't know if it holds in. Oh, hello. We did hold. Yesterday's high was 89 or 90. Let's call it 90. And we're to the moon. We are on a moon lander. We have taken off into space. Sweet, sweet space. Hot balls of space. Flying objects go round and round. Woo! Juice Mergooser. Jimmy is approaching yesterday's high, 29.19 with volume. And we just broke it. ASST 1160. Anyone have halt levels on this? Are they pretty close? Check out. They all listen to each other for sure. Investigation by the FTC, is that what he said? SYTA near high day. I missed the 5-minute on it, but it was there. SYTA, this is kind of pretty here. 620 break could shoot you up to high day pretty easily. Oh, MACD's opening up downside. Loading 169 bastard. Don't get the bastard part. Core weave, interesting, honestly. What does it mean when market makers are set at different level prices? They're just representing the people that want to sell at those levels. There's some that want to sell at 609, some at 610, 11, 12, 614, 618. It's just the prices and the quantities that are available at said levels. Not everyone's going to want to sell right, at the current price. Some might want to be a little higher and hope the price comes to them. 613. $30 seconds. I don't know what you're talking about. Oh, 30. Yeah, what are you talking about? Pony 5-minute Nick calling out. Man, Quantum is ripping. So it is basically setting a price to sell at. And well, not me. I don't have any shares of this. This is what other people are setting their prices to sell at, and these are the prices that people want to buy at. It's just, that's, say I had shares of this. I'm like, well, I think it's going to go to 620 again. I'm not going to put my shares for sale at 610 if I think it's going to go to 620. I'll put it at 620 and I'll just put an order there. 620. Here, I'll do this. I'll do this for science. 1 share. Okay. And then I'll put my order to sell at 620. You're not going to see it on the level 2 because it's too low. It's only 1 share. But I have an order and I'll be selling at 620 if price gets up there. Still watching this for a break of 620. Cock. No juice. Watch that core weave, boys. Doing a pretty nice red to green. GME with a W. SYTA coming back up. SYTA 620 break. 619. Broke. Those are daily levels in a big way. DF, yeah. DFTV breaking out again. ASST 5-minute we'll watch. .1 minute on SYTA, holding up very well. Sideways action is ideal for a 1-minute play. Got 650 above us. Don't go. Damn it. Core weave, red to green. $12.72. DFDV high day. SYTA 1 minute, big 1 minute cuck and go potential. Wait. What am I looking at? Oh, ASST 5-minute. GME still compressing still. Is this a 5-minute on SYTA trying for the break? Got it. Pony juicing. Daily, well, that was nice on Pony. That was a real nice range break on Pony. GME has a 29-21 level. That's why TA is still moving. That's why TA. Damn, going for 7. GME 5 still here. Give us a cuck. Give us one cuck right here. That's why TA is still just juicing. Core Weave still watching on that one. Whoa. Pony got the daily. Is it doing the daily? Real close. 1850s kind of pivot area. SYTA. Give me just chill for a second. DFDV looking for that 49 and then 50. Is there anything you look at when entering before the break of a level, or are you watching? Are you strictly entering once the key level? I'm definitely trying to get in the anticipation of the break. So say the level's at say it's on this one 112. This is a bad example, but I want to see bid support as we're getting close to it. So I want to see the bid getting close to it and not getting smashed. There's another thing that I'm looking at that you can't see on screen is this time and sales window. I want to see it flashing green, which means people are buying on the ask. I just look at that out of the corner of my eye. It's the same idea as this, but this isn't updated in real time, and my time and sales window is. Golly, this SYTA is juice. And they're going to drop news today. they close their offering, and then this thing's going to go absolutely ape shit. You watch. If I'm going to get in for an anticipation break, like say it's 720, that's a good, or yeah, say it's 720, then I'm trying to get in for the anticipation. 117, 715 breaks is probably when I'm starting to smash the buy button. Unless there's like a wall that I can obviously see, then I missed ACSST. There's the 5 minute on that one. That was a GME 5 minute. Damn. Still got the level here that I'm really interested in. So this 29.21. At this point, if I start, this is such weird price action. If I start seeing green on the tape here, I probably hit it. Weird price action. Any other day, this juices. Weird price action. And then you just get 140,000 shares out of nowhere. Ooh, TSSI, isn't that one that I was watching for the daily? Yeah. Comes right back down. Weird price action. ASST juice. Pony through the daily level. De poop. De poop. De poop de poop. Oh, double poop. Double hit, too. Getting better to pope. Getting better. 4 weave 5 minute. This little break here at 112. Good fill. Good fill. I'm happy with that. Broke it. Go high. Go 70 and break 70. Good volume. Come on. 1250 and then we're good. 1250 and then we're cooked. Come on. Nope. Gotta give some of the stock odds. Do it now. Juice. GME, absolute juicer. There we go. Core wave. There you go. Go get it. Chuck with the open mic. Here's your reminder. Natural gas. We must have natural gas at 10:30.
What? What's that smell?
Mimo gifting out the sub. Let's go, buddy. Are you in? Are you trading?
Opportunity.
Talk to me.
No, money. Okay. I smell money.
SYTA hit 780. Jeez. This is what I hate about all these little itty bitty candles moving up, and then one gigantic girthy dildo to hit it down. It's disgusting. Pony is on fire right now. Shred, you in that core weave? That was a nice one. Where are we at? I feel like, yeah, we're doing good today. We're doing good. Got a 5-minute on DFDV, maybe. ASST. Kind of doing a 1 right now. Biggest winner? DM me, Looney. I want to celebrate with you. Celebration. It's a celebration, bitches. Telemurphy! Wait, 30? Looney, that's on you. That's not on me. That's in you. You put that. Don't you put that on me. Oh, son of a bitch. ASSD, damn it. It's got the push, man. It's got the push. Why semiconductor selling off? Weird. Weird. Tariffs? There wasn't any new ones, were there? Core weave again. I feel like I just missed a W. Dude, look at that tail on GME. On the 5, that is gorgeous. When are traders going to trade it instead of this computer garbage? LTRY curling? That's a GME 5-minute right there. ASST 1-minute play. Over 47. $40. 44. Oh, no. That's cock and dump. Cock and drop right there, boys. I killed it. I killed it. That was a very red trade. Yeah, SITA. That was a very nice curl. Watch the KDLY curl. That thing did some big moves from the depths yesterday. Use it. Use it. Let's go, Drowsy. 40 months, my man. ASST has a W. There it goes. There it goes. There it goes. IONQ building something, maybe. Core weave 5-minute building out. Oh, is he there? Jeez. Very interesting. Oop, CoreWeave. I missed it. High day break. 25. Good fill. Please do more than just tap it. 44. Can we get the 50? Nope. There it is. There it is. I didn't realize this was the big level. Oh well. SYTA coming back to high day. Watch that one. That's a 5-minute play there for those gamers at home paying attention to that one. 844 is, I mean, we're less than $1 away from 2-day ago high. You get over $8, that's the 200. We could see some serious shit. We could see some serious shit. Jimmy curling. Still gambling. Need to reflect. See you tomorrow. Killer. DM me if you ever need help, man. I'm here for it. We also have a section in Discord. COSM insider purchase at 47 cents. $100,000, is that what he said? Take a shot at it. Used to be a fun trader. What was I just watching? SYTA. High is 84. Over 775, I'd probably start hitting the buy. Kind of shitty fill, but you know what? We're used to that, right? Holding 770 like a boss. And it gives it up. Okay. Okay. Said nice things about it. Regain 770. Don't. ASST coming back up. 5-minute on this one. 1266. Jimmy juicing. Do you have your own business as a day trader? Does that help certain I don't have my own business now. It's just personal. It's a big cuck and go. And it's not doing the go part? You kidding me? Do the go part. Oh. Do the go part. There's the go part. And back down. And back up. What are we doing here? I'm lowering size because this is scaring the hell out of me right now. Yeah, I'm all out. Mm-mm. Mm-mm. Uh-uh. That's acting weird. It could go without me. Which it will. We'll have no problem doing, apparently. The cooler boys. All right, big level 844. Son of a gun. GME 2980, big level. And then absolute juice breakout. Right? That's what we're looking for. So this is now red. Okay. This didn't do anything. EFTV. Yeah, watch that 48 for sure. CoreWeave 5-minute build now. EFTV broke. We're gonna be so slow getting over here. Oh, you false salt bastard! Jimmy broke 29.80. We're gonna go for 30 today, boys. Oh, I'm not paying attention. Okay, we gotta exit that. Okay. Freaking pay attention, SJ. CoreWeave 5-minute looks like an absolute juicer here. This is 71. Oh wait, it already broke it. How did that happen? Sip a shake or smoke one of your favorite cigs. Trust yesterday's gut. LUV. Oh man. I'm picking this trade up. There's 30 tests. Look at that volume. SYTA high day. Over 30.22, baby. And I just start printing money. Cheese, you see this? Gonna sell half. Just so I don't have to hear about it if it gives it all back. CoreWeave broke 115. Okay. SYTA, absolute monster break here. 844. Where does the share stand? I sold that. I don't have it anymore. What are you talking about? In the swing account, it's up a little bit. Dude, GME. Let's go, boys. Let's go, boys. That's right, Nene. That's me right there, baby. We're doing good. We're doing good. Oh, what are those? What's that vehicle of trading called that that everybody in overseas plays with? It's not shares, but it's like supposed to represent shares. CFDs, right? CFDs. That's it. Thank you, Nick. Oh yeah, forgot about cost. What is cost doing here? If it wakes up, could be a fun one. Pony, absolute monster today. CYTA. Needs a hole at 844 right now. There's a W forming here on SYTA. This would be 858 break. $30 retest on GME. Damn. Urban coming back up. Got some 5-minute levels here. A little bit of a flat top to go with it. Looks like an ascending triangle, actually. 2-pointer. Let's see. Is that 78 break? 78, 83, 89. FTA 6.8 billion budget. Crack may allow Apple, Tesla, and Nvidia shares as digital tokens. Yeah. Wonder how that's all gonna work. Piton. Where are you at? 3,600. WKEY hitting the scanners. You know, it is getting that level here. A diagonal from like a long time ago, but it is still legit. That's a 1, 2, 3, 4 point pivot. If it gets over 7, I'm gonna get interested. Senate committee approves Trump's DEA pick, who refused to say if he supports marijuana rescheduling proposed before agency. Peloton looking like a inverse head and shoulder on the daily. Have to watch that one. BON. Just trying.
What up, Daddy? Let's get them gains.
Homicidal. Let's go. 41 months, my man. Hey, GME, cut this shit out, bud. Sorry, guys. I just killed this thing, too. I went Q 5-minute. Cuck and go watch the 40 break. Damn the volume here. Whoa, there's a battle. Oh man, at 94. Got 940 to 3. Wow. This juice it. Old 40. Son of a bitch. Nope. Cucked me. There's a big fight over this 40, man. Until video. Beta just hit that news that she's talking about. It's like an add-on play to boost. I don't know. I'll take my $20. There it goes. Of course. Kitty wine dying. Nick calling out Pony 5. Looks awesome. Fight with that 20. QT Josh Brown. I1Q. There's the juice. Damn. Yeah, I know, right? It's real bad out there. Here's another 7 bill, Sam. There you go, bud. Average one you've been looking into me. MLGO? I saw it hitting the scanners, lady. Okay, so you're green overall. You must have been averaging down like a mofro. Holy jeez. Get out of that trade. I mean, I can't tell you what to do, but I would get out of that trade if I was in your shoes. Shut up, she. SYTA levels here. It's actually a 5-minute. Oh man, a 23. MACD's down. This is the level I was looking at right there. MACD gonna flip? IONQ. Did it again. Damn. All right, we're getting across. It's a cook and go, actually. About swinging LUMN. I don't know why it popped today, but damn, it gave it all back. I mean, I want to. It bounced off yesterday's close, which is good, but damn, I don't like it. Nice little double bottom here at 3, so maybe reverse for a while. You've got a pivot point at 450. That's kind of where it gave it up. Purchase a part of the securities by AT&T. Yeah, I mean, this is a billion share float. This is not a company I follow. So I'd ask someone that follows it better than I do. Buying yesterday's after hours. Luke, what are you talking about? What are you talking about? SYTA pushing these levels here. 58 break, I think is it, right? What we're looking for. $169. Bastard. Oh gosh, what a month, man. Back-to-back baller months. I mean, there's still plenty of time for me to dick it up and let me bask in my glory. for a little bit. YOLO SPX. Good old GME, man. That's the winners today. My biggest loser is $100 on Form 4 filing. I'm red on IONQ? Damn it. How is the month looking? Biggest loser all year is DJT. Thank you, Dad. Bitcoin, 111K. All right, this seems like a buy down here, man. Check out crypto. IONQ, is there a level? No, this is not a level. Three chances at it, couldn't do it. Give us a pullback. You got the high day, and then the 50-cent level right behind it. Okay, here it is. Haven't even looked at the 50 level yet. Just 41, 49. Gotta get back over 4150. Sorry, 4145. Yep, just did it. Nope. That's 200 shares. That's good. Good thing I did a typo there. Got no time for freaking smiling cheese. Could have done better on my exits. Cuck and go. I'll take it if 4160 gets touched here. Over 4145, I buy. It's a 30-second cock. Do it. All right. Now it hits the 70. What is this cheese? IO and Q, there's a friggin' move there. Who said that IO and Q would be the NVIDIA of quantum? Who said that sent this thing to the moon here? Oh, oh my gosh. It's the market, man. Shit's just been working. The IONQ CEO said it. Will I stream it? No. It's below my standards. Cheese. Give me some quality material. It's not realized. What the hell? That was a nice breakout. The real Valkyries. So stupid. The pinwheel. Listen, I don't want anything to do with your pinwheel. Who knows where that thing's been? Bouncing off of yesterday's close area. Damn, I wish I was paying attention to that. And Hollow out with another headline on, another quantum day here. Let's see if it'll move it. Hollow Micro showcases progress in quantum enhanced imaging based on canonical. No, what? I don't know what the hell that word is. Oh, non-local, not an I. Non-local effects. Recess pieces. Oh, Stackers with the gifted sub. Let's go, buddy. My man, thank you so much. Appreciate it. And thank you so much. All right, I'm getting out of this piece of dung. ASST levels. WKUI. Did that just break? Yes, it did. I should be grandfather. And you have 2 accounts, and I have no idea why. That's on you. Top W. Oh, yeah. Yes. 1080s. IO&Q still juicing. Wave down.
Come on.
46 months and still waiting on that sub-R reward reveal. Lol.
Groovy, let's go. Groovy. Et tu, Brute. A lot of chatter. 150 calls in August. They're not moving. Still watching this KDLI. I gotta put my trash out. I'll be right back. What's up, Peepo? Ever since I actually added other chats, I lost my 7TV emotes on screen badge. Huh? Oh well. I don't know. Yo, hymns, big pop here. It's just a breakout? Yeah, okay. Jimmy has a tight 5-minute. Go either way. You see this shit? This is kind of doing nothing here. Oh, that got on me. With the 420. How does that one not even show up? Whoa, SYTW. You seen that big ass dip and rip? Rip with a W. Damn. It's fighting with that 8. You get over 8 and hold, we talking moon landing, boys. Dark pools are real. Well, it wouldn't show up more than likely because I was, well, the 420. Yeah, okay. That one. That one was a little horse shit. Coin. Yep. 11.5. Damn it. So rangy. Gosh. Let me just do it like this. Just do it like that. That'll make Cheese happy too. Really tight range on this GME. We got another video to watch here, boys.
Episode of You Got Options from the SIBO floor. Brought to you by Kai Wealth and Top Traders Unplugged. Today we talk to Jim Bianco of Bianco Research, one of the most well-respected independent voices in macro research. Surely is a macro-driven time, and we get some real deep dives. We start with Mayday and the origin of populism right here in Chicago, and then we get to the next 10 years and tariffs and populism and what that's doing for markets. How do you bet it? How do you play on it? I hope you enjoy the episode.
Yo, Live it up, don't settle for less. You got options. Put your skills to the test. It's your call. Time to strike. Make your move. Grab the mic. You got options. Execute your trade. You bet your money just got made. Flex. Time to straight the fade. It's the nexus of the
Someone got an intro.
Hello, welcome back to You Got Options. It's our second episode, and I can't think of a better person for our second episode than Jim Bianco. Thanks for joining us, Jim.
Thanks for having me. Looking forward to the conversation.
Jim's an old Chicago person, so wonderful to have him here on the floor. We were talking a little bit about some old
This episode
Chicago
two.
stories. It's almost May Day.
8 days ago.
May 1st, and he was giving me a little bit of background. You mind sharing that story to start here?
Yeah, so May Day is the big holiday in the communist countries around the world. It's workers' rights, where they celebrate the rise of...
Shut up, Soils. I was thinking the
where'd that
same
come
thing.
from? It came from a park about a mile west of where we are called Haymarket Square. In 1886, there was a demonstration then to invent this thing called unions. And a lot of the workers or a lot of the business owners in Chicago, the Marshall Fields of the world, those are the names, were against it. And a bomb went off, killed a bunch of workers. Turned out that the Chicago Police Department planted the bomb on behalf of the business owners in Chicago. And that was the catalyst for the entire labor movement throughout the late 19th and earliest 20th century that brought us the 8-hour workday, 5-day work week, which is celebrated on May 1st in communist countries around the world. So the next time you think about what communist countries are for and what they stand for, it all began in Chicago. And if you know Chicago politics, seems kind of appropriate.
Echoes of the past into the future. That's kind of an interesting kind of point to start this conversation, which I think will be a wide-ranging kind of conversation about macro, where we are at this critical time. But before we dive in, I want to get a little bit of your background too. Tell me about your early Chicago days and how you got to this point.
Grew up in Chicago, grew up in the western suburbs of Chicago called Hinsdale. Went to school at Marquette University in Milwaukee, Wisconsin, graduated in 1984. You get back into my age. It's old.
84. That means, what were you doing in 87?
87, I was working on Wall Street.
Oh, wow.
So
it's got to be a good story there.
Yeah, there is. So I was working at Shearson Lehman Brothers. That was their name before they became Lehman Brothers, in the 101st story floor of the South Tower, by the way, which was Cantor Fitzgerald's offices some 16 or 17 years later.
Wow.
I accepted a job with a firm called Boston, which became Credit Suisse, which is now UBS, on October 16th, 1987, in the equity research department working for the technical analyst Joe Generalis. The next Monday was the crash. And I called him up after the end of the crash that Monday, and I said, do I still have a job? And he said, at this point, I don't know if I still have a job. And it turned out...
Sounds like margin call.
I did have a job. I was the last person hired. And when I got there, my nickname was LIFO. Last in, first out. So they always used to call me LIFO in all the staff meetings. And the director of research, Al Jackson, heard them calling me LIFO one day. And he starts off the meeting going, I think that's great. That's funny that you call him LIFO. It's fantastic. He goes, but just remember, and he points at me, he goes, he doesn't cost me any money. You do.
Yeah, sometimes it's first in, first out, right?
Yeah.
A lot of times.
Yeah.
Amazing. And then that's a crazy way to start. That must have given you a pretty wild
LIFO,
perspective
I like that.
on the financial industry. How to go from there? Where did you go from?
Yes, I worked there for a couple of years, followed Joe to UBS Securities. This was all in New York City, by the way.
Yeah.
One of my clients back then was a firm called Arbor Trading Group, which is a bond brokerage firm that's headquartered here in Chicago. I wanted to get back to Chicago. They hired me in 1990 as the director of research for fixed income. Of course, I was the only person in the whole department, so I gave myself the title of director of research.
Nice.
And I worked there for 8 years. And in 1998, I spun myself off.
That
through them
ticker
as
CVS,
Bianco
Charlie
Research.
Victor,
Bianco
Sandy,
Research has
note
been
the
around for 28
possible
years.
negative catalyst,
Arbor Research
reporting
is
from
now
Fortune
their name.
exclusive
They used to be
PillPack
Arbor Trading
founders
Group.
and
It's
Amazon,
still my
colleague
partner
launch
to
general
this
medicine
day,
and online one-stop
and is a
shop
shareholder
for medical
in my
care.
company, and I'm still a
Ooh.
shareholder in Arbor. So I've been with them now for 35 years.
I almost have as much gray hair as you do, but I started in 98 and you have, a good 14 years on me. So, I'm sure I can learn a few things from you, as can our listeners today.
How to properly wear suspenders, because I was in the 80s when we used to wear suspenders.
I love it. I love it.
You gonna go high down
I
that
want to lead
news?
today off by really, taking a big picture kind of view, backing up a little bit here. You led off with that May Day story, which is really about labor rights and populism, right?
Yep.
And I think, again, echoes of the future here. Here we are amidst a tariff war and protectionism that I've been talking about for some time, and I know you have in your own way about where that's come from and where that's going. So I'd love to kind of give you a little free rein to kind of start out and kind of paint the story as you see the big picture and where we are kind of from 30,000 feet.
Well, I think, I'll start off by saying that I think Trump's got the right idea, and I think it's all about the execution, which we could really start to question. What's the right idea? If you look at the state of the U.S. economy, where it is right now, its fiscal position, its debt position, its deficit position, and the like, you could, channel like the Muhammad Al-Arians and the Ray Dalios
Hymns,
that have said
nice curl.
it's unsustainable and that something has to change. And I think that Trump and Scott Bessent and Howard Lutnick and Stephen Mirren, who's his Council of Economic Advisors, would all agree with that. We could not continue with the status quo. So they've enacted a bunch of policies to try and change the status quo. Now we can argue whether or not those are the right policies. But really, what was the driver of the status quo being fractured is the inequality. At the top line, you could argue for the last 40 years that globalization has been a net benefit to the U.S. economy. I completely agree. It has been. But along the way, there's been losers. And those losers have been the working class. And that's Trump's base. And if you go back to 2016, when Obama said, what are you going to do, wave a wand? Those jobs aren't going to come back. And then Trump says, no, I got a plan to make those jobs come back. I think the working class said, at least he's going to try. And that's where tariffs come in. And that's where this disruption comes in that he's trying to do. Now, is it the way he's doing it? Is it the best, most optimal way? I'd probably say no. But what I'm trying to push on the idea is, would Trump just stop? Just call it off. Just say, I give. Let's just go back to the way it was. We can't. I don't think we're going to go back to the status quo. So if you don't like this radical policy that he's been promoting, give me another radical policy to promote. So that's really where we have to go forward, and we can't go backwards. And that's the thing I try to emphasize is the criticism seems to me to sound like, let's go backwards, and we can't.
I think we agree on one thing. It's an intractable situation. It's a situation that if we don't deal with it now, it's only going to get worse, right? I disagree with some of the details in terms of, and by the way, you have a lot of good company that agree with you, like the Dalios of the world and the Druckenmillers. I tend to really disagree that the debt is the problem, right? The debt here in the U.S., much like Japan monetized all of its external debt. I mean, you could talk about its 250, 275% debt, but it's all owned by its central bank. Its effective debt is now zero. It has monetized all of its debt. And it could do that because of the support of the U.S. and the West broadly. And so, not only did its currency not collapse, its currency became much stronger in that period. So I would argue that the U.S. could solve the debt.
Is Kim advocating that we do what Japan did?
Problem on its own after a minor
With our
fear
currency?
and crisis or whatever it is. We've already done that, by the way.
Damn.
That's what 1971 Nixon taking us off the gold standard was. That was a debt
Mass
jubilee,
attack
essentially.
starts in
Oh my
and what
gosh.
came of that?
You know
It's
what?
eventually a
This
stronger
is just
3,
unbelievable
2.
right now. It was chaos. Freaking A, Pope. 3 of them. That was
That's just
GME chaos.
IMRN, India, Michael, Romeo, November, searching the spike in activity, new highs. Note the social media circulations on that name, IMRN.
Of course, it's going to get it back up there.
Currency again. And so I don't think that's the core problem. But you did touch on something that's, I think, the core critical issue, which is inequality.
Right.
Right. at the end of the day, if you think about, why we are where we are, if you push, constantly money to the top of the distribution, to corporations, to wealthy individuals, it's the natural system. It's a winner take all.
We're gonna try a
Survival of the
30
fittest
test?
system,
First
and
go?
the biggest, most powerful gets stronger and stronger and stronger. It's in the Mesozoic era.
Okay,
bunch
guess
of
we
oxygen in the
are.
system. What happened? You got a certain group of dinosaurs, or predators.
Mother of God,
And,
freaking A.
at the end of the
I
day,
just shat my pants.
that works.
I just shat my
But
pants.
It works for the whole system at large. It doesn't work for everybody.
Right.
And we are not all cogs in a system. They're human beings in the system.
I just shat my
and
pants.
the distribution
Mass
of income,
attack
Oh,
starts
the
in
inequality,
God,
has
shitting
grown
me right now.
dramatically.
3, 2,
Look at it. If you didn't figure it out the first time, figure it out the second time. Blazing, I can't help you. I can't help you. I can't help you. Look, Boorar figured it out. I got all these dudes that are new to the channel figuring it out. And then all these OGs are dumb as shit.
Yeah, programming note for EQT, Echo Quebec Tango, Cersei RC and a bump in activity at the highs. Let Josh Brown needs
Come on!
halftime report, CNBC.
Come on! Freaking making sweet love to my face, it looks like. Jesus. How do we get back-to-back attack? You probably... My guess it's deep cheese falling. Oh my gosh. There's chaos! I just want to point out a little bullshit here. Look at this. 169,994. Can I get any more bullshit here? I need some shit thrown at this horse manure. It's the 170 curse. Yes, right. Hawk to it. There goes my monetization. Do I need a touchscreen monitor? Oh my gosh, this guy. This freaking guy. Okay.
In the last 40 years, through supply side monetary policy, we took interest rates from 20% in 1982 to 0.3%.
Mother of God!
And that's wonderful because that drives zero inflation, actually deflation, drives globalization, technological development, great growth. You mentioned this was good for everybody.
I'm gonna pass out.
The
double
problem was
golden
it was
tomato.
not good for everybody the same amount. Dramatically better for the top of the distribution.
I get PTSD
and
now.
for
Every
lowest
time I
cost
hear something
labor.
after the freaking air
And
horns.
who sits in the middle? Who got decimated? Trump's base.
Yep.
I can't even.
That's everybody. It's the middle class.
I gotta rewind. I missed the last whatever he was talking about.
Through supply side monetary policy, we took interest rates from 20% in 1982 to 0.3% tenured. And that's wonderful because that drives zero inflation, actually deflation, drives globalization, technological development, great growth. You mentioned this was good for everybody.
Right.
The problem was it was not good for everybody the same amount. Dramatically better for the top of the distribution and for
This is a man that just got his Rivian
and who sits in the
share
middle? Who got
options.
decimated?
This is the man
Trump's
that just got
base?
free shares.
That's everybody.
That's what
It's
that
the middle
is.
class. We have completely hollowed out the middle class in the U.S., and that is an intractable
A
problem because at some
a
point
seat shocker.
people vote. Some point people say this system's not fair.
I've often
And
thought
that's what's
about
happening.
adding
It's a populist move. Echoes your Mayday.
propane
It was happened in the
flames in
1880s,
the
it
back.
happened in the 1930s.
I just got to figure out how to do it.
Happened in the 70s. Here we are again. This is not a new story.
You know,
The
to light me on
difference is
fire for the right
the
price,
extent to
obviously.
which has happened, where we are as an empire, and where they're dead is, where all these things are combined.
A
Right?
dunk
And
pull.
how difficult that
I'm
makes that
trading on a
situation.
dunk pull.
Yeah. So a couple of things.
I'm missing all of this. Jeez. The Pope burned my house down. Thank you, Nene, for that, by the way. hymns. Son of a bitch. Is that the Pope again? And the shitter. Double hog, double shitter. This is the man that has too much money.
IGN, that's Inogen Incorporated, seen a move up 13.4% to $6.76 a share, and shares are trading higher after Needham upgraded the stock from hold to buy and announced a $12 price target. That is India, November, Golf, November, INGN.
All right, there's your 170. There's your 170. You were here. Do they do moments anymore? Nope, they don't. Hunter, are you in Japan right now?
New market update for you.
Now we got Chuck Jones. This is turning into chaos.
S&P 500 up 13 points, up 0.23% to 5,857.
Cheap too, huh?
Dow Jones Industrial Average up 90.
The Asian cultures have a lot of
it's 41,954.5.
a lot of thoughts on healing through
134
pressure points on
0.71% to 19,006.69.
Never tried it, but I'd be willing to give it a go.
Index is down so far today. Down just 7.74 points,
his
0.04%.
Stream schedule.
2,045.81.
Unpinned is
gold
pinned.
Down $20.20 an ounce.
Cohen.
0.61% to $3,293.30. And crude
was that
oil
just now?
down just 91 cents, 1.48%. That's to $60.66 a barrel. There's your market update. 3 hours, 51 minutes until the close on this Thursday.
Yes, today. Huh. Very interesting.
Some point, people say this system's not fair.
Right.
And that's what's happening here. It's a populist move. Echoes your Mayday.
Yeah.
Right? This happened in the 1880s. It happened in the 1930s. Happened in the 70s. Here we are again. This is not a new story.
How can I appeal all
the
these
difference is
bit charges on my credit
the extent
card?
to which has happened.
My mouse
where we
got
are
stuck.
as an empire, and where they're dead is where all these things are combined, right? And how difficult that makes that situation.
I mean, you could just call your credit
so a couple
card
of things. You're right about it. The deficit situation.
If that ever happened, which obviously is horseshit.
The U.S. federal budget is about $7 trillion.
Credit card and cancel it.
About 5 of that's covered by taxes. The other 2 we borrow to make up the difference. So taxes cover roughly 75 or 80% of what we spend. We borrow the other 20 to 25%.
I want to listen to this.
We're not going to balance the budget by trying to find.
I keep rewinding it because I'm not paying attention. But I catch up from 2 days down last week. A little dippy poo and recovery yesterday to 170K. Yeah, well, I didn't have a down week last week. I was green. I just had, was it last week or the week before we're talking about? I just had 2 big red days and then 1 big green day that covered it all. Fucking hey! Rivian, fire this man! Okay, let's take a look. All right, first week, which is really just a day, minus 300, about 250. Second week, $6,300. Third week, 9,000. This week, 11,000. It's been a good month. Performance. 72,000 year to date. 72,000. 72% year to date. While your S&P is down a 1.8%. Old stocky jockey is outperforming the market. badass. Think how many air horns that would be. You're right. It's a lot of air horns. It's a lot of air horns.
The difference is the extent to which it's happened, where we are as an empire, and where their debt is, where all these things are combined, right? And how difficult that makes that situation.
Yeah, so a couple of things. You're right about it, the deficit situation. Let me put this in starker terms. The U.S. federal budget is about $7 trillion. About 5 of that's covered by taxes. The other 2 we borrow to make up the difference. So taxes cover roughly 75 or 80% of what we spend. We borrow the other 20 to 25%. We're not going to balance the budget by trying to find more taxes out of everybody else. But that's essentially, it's a spending problem.
Yeah. I don't know that we need to balance the budget.
Right. Well, we may
I mean, people would argue that you could just, the Federal Reserve, I know it seems irresponsible, the Federal Reserve is not a human being. It does not have the same, it prints its own currency, which is the reserve currency of the world. Again, Japan did this. This is not something that's new.
Now.
Like, if we really wanted to, we could internalize and buy all of our external debt. And by the way, I think there will be an effort to do that in the next 5 to 10 years. I think that's the only way out.
Mm-hmm.
Right?
Yeah.
It's the only way out. And it will be assisted by our allies if we don't alienate them.
Well, that's exactly right. One of the things that Trump has been pushing on with our allies, and again, his motivations, his ideas are right.
Implementation matters.
I'll give you.
By the way, what Kim is talking about basically sends any asset through the roof. And then we're talking Bitcoin 1 million.
I'll give you a couple of statistics. Since 1960, the U.S. has spent $22 trillion on defense. Since 1960, NATO has spent $7.5 trillion on defense. Well, the U.S. has been the leader in fighting communism, fighting terrorism, any kind of conflict throughout the world. We take a lead role.
Right.
Europe has taken less and less of a role. To fast forward today, we are now fighting the Houthis in Yemen to reopen the Red Sea. Even the New York Times has admitted Europe can't do that.
Right.
That the Houthis are too much for Europe right now. That's how bad
kind of crazy.
or how much their military offense capabilities have retarded relative to the U.S. They've admitted it too. That Europe has said, you're right, we need to spend more on defense. We're willing to spend $3 trillion more. Trump, you got the win.
Right.
You said that they need to spend more. They agreed, and you keep kicking the teeth.
No, I completely agree. And the reality is, it's about power.
Right.
It always has been. It always will be. You have a China-U.S.
Bitcoin about to break out here. We're
right?
going to
The
test the
US,
highs.
The old empire, right, or whatever, is at a point where it is still meaningfully more powerful economically, militarily, in other ways you could argue, but particularly so with its allies. And I think
111.7.
The approach, yes, I agree with you about spending, whatever. But if they do start to fall in line, the last thing you want to do in terms of realpolitik, right, is alienate and push your allies away. In terms of implementation, that's the reality. But we can get away from politics and policy and more to kind of economics, right?
Another test coming up here.
The reality of the
111.9.
is if we choose to prioritize as a society median outcomes,
$100 away
instead of mean outcomes,
$80 away,
instead of maximizing GDP, but maximizing the median person, the average person's outcome, which is what we're essentially talking about when we talk about
populism. And they're not
populism.
the same thing.
They're not. They sound very similar.
Yes.
They're actually dramatically different. And this, given how unequal, this has happened. Last year, just to give you a statistic, the top 19 families in America, just 19 families, increased their wealth by $1 trillion. $1 trillion. I mean, think about that. Think about where this has gotten, right? That's enough. That's the same as about the bottom 40% of America. We're talking about 19 families, right? It's an incredible 120 million people versus 19.
Right. I'll give you another statistic along those same lines about the concentration of wealth. Actually, two. the top 400 taxpayers in New York City pay nearly half the taxes in New York City.
Yeah.
Trump used to be one of them. And Trump famously said, you're treating me poorly. This is well before he was going to run for election. And I'm going to leave and go to Florida. And Bloomberg was the mayor. And when Trump said, I'm going to leave and go to Florida, basically everybody's attitude was, don't let the you-know-what hit you on the way out. We kind of did that to Ken Griffin here in Chicago when he left as well. And Bloomberg said, look, you can't lose these guys. You lose 2, 3, 4 of them, you're going to have a financial crisis in your city or in your state. David Tepper left New Jersey to move to Florida. He owns the...
But it didn't used to be that way.
Yeah.
And it doesn't have to be that way,
Right.
by the way.
By the way, the other statistic, just to give you an idea, writing it bigger, is for the uber wealthy. Currently, all retail sales in the United States, the top 10% of income is now 50% of retail sales. That is the most concentrated it has ever been. So that when we talk about how retail sales are doing, you're basically asking how the wealthy are doing.
Oh, shit.
This is not the bottom half.
This is a critical point you're bringing up.
Whoa.
The top 10
What did he just say about retail sale?
By the way,
the other statistic, just to give you an idea, writing it bigger, is for the uber wealthy. Currently, all retail sales in the United States, the top 10% of income is now 50% of retail sales. That is the most concentrated it has ever been. So that when we talk
That's
about how
wild.
retail sales are doing, you're basically asking how the wealthy are doing.
Yeah, and this
It's
is
not the bottom half.
This is
of
a
the
critical point you're bringing up. The top 10%,
Right.
the spending and the economic output, right, of that top 10% is at a record relative to the economy,
Mhm.
right? You were telling me a stat earlier. What's the actual stat? The top 10% is
50%
of
retail sales.
of retail sales. Wow.
Right.
Yeah, I mean that's an incredible statistic,
Right.
if you think about it. And at the end of the day, the problem is if you start taking from that 10% to give back to the people on the bottom, those 10% don't spend all the money they make. They invest
Oh, and Q.
the majority
I
of what they make, right? So an incremental dollar to that cohort is not the same as an incremental dollar to the person at the very bottom of the
Good
distribution.
point.
Right.
And if we're going to start creating jobs here in the U.S., which are at the bottom of that distribution, bring them back from China, bring them back from India, bring them back from the rest of the world, you may actually get employment growth. You may get a better median outcome for the majority of people. But if you're starting to pull from that 50% of retail sales from that top 10%, you could actually have a situation where GDP declines and employment hangs in because we're getting the distribution. Actually, I think that's probably where we're going, not today, not tomorrow, not in the next month, but in the next couple of years, you're going to start seeing a very stagflationary
Roger
picture.
cheese.
And that's what that essentially is.
And I think that's what the markets are starting to play out
Exactly.
and starting to sniff out as well. But to your point, another set of statistics kind of put this into perspective. About 1/3 of the American public, 35% to be exact, has a college degree. 65% don't. So if you don't have a college degree and you want to make a decent living, so you can raise a family of 2 in a decent house, have a decent 2 cars, have a decent vacation and stuff. What are your job opportunities without a high school, without a college degree? It's usually working with your hands. It's usually heavy manufacturing, or it's in construction, or it's in repair, or something along those lines. And if those are the jobs that we're trying to bring back, that is what the majority of the country is looking for. We've tried, going to college is kind of it's a cultural thing. It's not good enough for us to say, go to college, learn to code. That the people
Bullshit,
that don't
Phil.
go to college, it's not because they don't lack the intelligence to go to college. It's not part of their culture. It's not part of the way that they grew up to do something like that. So that's why those loss of jobs in that middle class, that working class that got sent overseas because of globalization. Yes, at the GDP maximization, it was a win. But at the median, there was a price to be paid by globalization.
And I want to walk through this for like listeners here. We did what's essentially supply side economics from 1982 to 2021. And what do I mean by that? If you lower interest rates from 20% to 0, it got to 0.3, the 10-year did, right?
Gotta get over
Every
this
time
60
there's a
home.
crisis, you lower it, you're stimulating, you're sending money to corporations. Why is that to corporations when you lower interest rates? Because the majority of money that is borrowed by wealthy individuals, corporations, and
It's just about to
investors,
sell
right?
then, 'cause I know
And
we're
at
gonna
the end of the day,
frickin' cuck
that
here.
money and the benefits from it flow to the top, right? QE also directly into asset prices, right? Which is also owned by all the wealthy. So
68.
Federal Reserve policy is that monetary policy is supply side economics. If you do
1 minute
that
player.
for 40 years, you keep sending money to the top. Yeah, you don't get inflation because those people don't spend. You get asset inflation because people invest,
Right.
right? But you don't get goods inflation.
Did you really,
And
Cheese?
at the end of the day, that's great. You can have growth without
What do you
inflation,
say?
but it creates this inequality we've talked about, right? And at some point, people say, enough is enough. Not just, that doesn't only create inequality because the money's going to the top. What does a corporation do? There are knock-on effects. A corporation maximizes profits. So it has to try and find the lowest means of production. Well, guess what? That leads to globalization. You think it's a coincidence that the growth of China lines up with 1982 to 2021? No, it's not a coincidence.
Right.
And you get
Watch this
technological
60 break.
development. We've been in a massive technological boom. You take interest rates to zero. Semi-rated corporations, they're incentivized to create new goods and new who's its and what's its, right?
Right.
And so now importantly, and I wanted to bring this part in, there's a generational component. Because if you were born in
Gotta go.
1980 or 81 or 82 at the top of that cycle, you're now 43, 44, 45, and
There
all
it
you've
is. Hi,
ever
Dave.
known
Got it.
is increasing inequality, increasing technological development, increasing globalization. And your parents and your parents' parents have lost their jobs and you've lost status. That's what this is about. And that's why it mattered in terms of time. This really started with Occupy Wall Street and the Tea Party in 2010.
Right.
But that generation was 25
Right.
or 30, right? They didn't have the power. And the demographic bubble that is millennials was still at the mercy of the last demographic bubble, which was baby boomers. This is not just about inequality like vertical. This is inequality horizontal, generational, because when you leave high school or college, you are labor. And when you retire, you are capital.
You know, and
So it's the passing of a baton, really,
Yeah.
generation.
Yeah,
And
we
this
saw that
is
pop
what I said
on
at the
it
top.
because of that cheese.
Trump's got the right idea. This is a problem, what we're discussing.
Yep.
And that's why I'd like to really emphasize, all right, maybe the way he's going about doing the tariffs isn't the best or the most efficient way. I get that. I agree with that to some degree. But what is the alternative? And the alternative isn't stop and go back. We have to deal with this
Let's figure
intractable problem.
MNTN.
And that's really where
IPO is
why
open.
the
Michael
markets,
November,
I think, are
Tango
reacting
November.
The way that they're reacting, because if they just thought this was Trump's
Jeez.
throwing out tariffs, he's kind of a transactional kind of guy. If we slap him down enough, he'll call off the tariffs and then it'll all go away. No, they're not going to all go away because we'll still be left with this problem if he was to call it off that we have to deal with.
Yeah, Trump is a vehicle. And by the way, this, like I said, it started in 2010.
Right.
You know, it was before Biden. It was before Trump, the first, version. Started with Hope and Obama.
I don't know.
No,
what
this
it
is
They
the
wanted the
Ryan
political
Reynolds
dominance to
linked
get to where they are.
IPO
And
for
Trump
MNTN.
Oh, Ryan
came with that
Reynolds.
populist message. First time the right in a long
that's a
time
juice,
has
no
moved
doubt.
left in terms of economics, right? Towards that populism. He took the right kicking and
Frickin'
screaming.
A. I about hit the buy
That
button
move,
there.
though, is in line with the left also going left, right? And we could talk about Bernie Sanders and AOC. People think they're dramatically different. If you go look at the policies, they're the same general policies, right?
Right.
But not exactly, but
What was the
definitely not on
ticker?
social
Holy
policies,
shit.
but definitely on economics.
You're right. Just like in geology, every couple of million years, there's a pole shift between the North and South Pole.
Yeah.
We've been seeing that with our politics right now. What did the Republicans are been crowing about? That the party of the working class. They used to be the Democratic Party. What is the Democrat Party? At least what I see them talking about, they're talking about forever wars. They're very worried that billionaires are losing money in Wall Street, and they're all into free trade and against tariffs. That's the Democrat Party.
It's amazing, right?
So we
They've,
kind
like,
of
put-
polar shifted both parties right
The truth
now.
is they're both, trying to be further left from one another, just in
Right.
like slightly varying ways.
Right. But I think it really goes to a larger issue that they're recognizing that we're seeing in our politics, that something's out of balance and that the status quo cannot stay. And that's really what we've been really seeing in our politics and in what Trump's policies are and what the market response is. Something's going to have to change. And we're in the process of trying to make that change effective. Now, what it's going to be, how it's going to unfold, that's what the next couple of
So
years
what
are
does
going
this
to
mean about mean for markets?
That means a period of, I think, more
got
volatility for markets.
Quarter full
I've
here.
actually argued, I've used a spiffy little line, if you want me to talk about big markets, that we're going to be in the 4, 5, 6 markets for the next several years. Cash will return you 4%, bonds will return you 5%, and stocks will return you 6%. Now, how did I arrive at that? I think that we're in a period of more inflation. So we're not in a period of sub 2% inflation. We're in a period of closer to 3% inflation. Not to get too wonky, but the Fed likes to take, what's the long run inflation rate? And then they add a little premium on it called R star. So that means 3% inflation plus another 1% for R star, 4% cash. So money market T-bills will return you 4%. Bonds, if you look at things like the Bloomberg Aggregate Index and the like, the average yield on the bond market is about 4.90. That's all mortgages, treasuries, mortgages, corporates, investment grade, agencies. It's about 4.90. Let's round that to 5. So over the next several years, if you bought into a big bond fund, you'll get about 5%. Some years you'll get a capital appreciation because yields will go down, prices go up, you'll get 8 or 9. Other years like last year, yields go up, you'll get 3, you'll average 5. Stock. Going into this year, the valuations in stocks were so high. If you take like the Shiller PE ratio, the CAPE ratio was 37. Now, people will say valuation is not a timing tool. I agree. It's an expectations tool. What is it that you need if you're going to buy a Shiller PE of 33 or you're going to buy a forward 12-month PE of 23 to 24? What is it you need? You need everything to go right. Well, we're talking about an out-of-balance economy. The status quo can't hold.
Are you serious right now?
Everything's not going to go right. Now, it's not going to go bad. But at those valuations,
freaking in a big ass trade. We're freaking doing this right now.
Over the next several years to return you about 1.
I am a professional.
4, 5,
making fat
maybe
stacks.
Somewhere in 7. Let me restate that.
Come on.
Cash, money market fund will give you.
Holy Reynolds. Ryan, I want to have your baby. Hit that 25, Ryan. Hit that 25, Ryan.
You'll get half the 2/3.
Hit it. Oh, there's so much going on. Oh, what is that drop? That was a freaking 80-cent drop. Get back up there, Ryan.
MNTN.
Get up there, Ryan.
MNTN Incorporated.
Do it.
Shares open for trade at $21.
Do it.
$16. 11.7 million shares seen a big rise.
Juice me, Ryan. Juice me.
126%. $24.60
Juice it.
November, Tango November, MNTN. Opening up for IOP, trading at the IOP. It's priced at $16 a share. Open for trade at 11.7 million shares. That is like November, Tango November, MNTN.
I am a professional. Here comes. Oh, now it's going to break 25. Now it's. Ah! Son of a. Oh, this is halting up. Son of a bitch.
MNTN.
No, it's just MNTN. Cheers, halts to the upside. Michael November, Tango November.
Circuit breaker on the upside. Up 134.7%, $25.82 just was released for trading after the IPO was priced at $16 a share, open for trade at $21.
If you're on your phone and I can't help you, I don't think it's phone.
Shares now.
I don't think you do it on your phone.
At $25.82 and halted on a circuit breaker. That is Mike.
Some people,
November,
that's fantastic.
Tango, November.
Bonds will give you somewhere around 66 to 80% of the stock market's return with a little more volatility, especially if you have longer durations at the longer
Any reason I
end of the
pushed
curve.
it out? I was hoping for a
Stocks,
pullback
they're going to
before a
return you
25
6 or
test.
7. Now,
So shut
people
your mouth,
complain
Big Harry.
about that to me. Oh, but they return 20. They're supposed to return 20 all the time. Well, that's where I think there's going to be a big shift in the way that we invest. And the last thought I give you on that is active management's going to return. You know, and the reason I use the metaphor of sailing, I'm not a sailor, but if last year the stock market, the S&P returned 25%, if I'm in a sailboat and there's a 25 knot wind, I just got to get my sail in the air, just by the index, and I'm going forward. Now you're going to slow it down to 6 knot wind. Well, if I can tack and I can trim and I've got some skill, I can move my boat forward. That's active management. Last year, when I would talk to my active management clients, they would make the case to me like, here's a case for financials or for small cap or for healthcare or for international stocks versus domestic stocks or small cap versus large cap. And then they largely conclude, I'm kind of generalizing all of them, no one gives a shit because the stock market's going up 25%. Well, if it's going up 6, now they'll give a shit.
What video is this? This is You Got Options with Kai Media.
This is the passive active thing. I just want to hit this real quick. And we had Mike Green on here last time.
I know Mike disagrees.
Passive, right?
He disagrees.
He and I debate this all the time, but I think it's so important. Passive investing did not exist until the 1980s. Why? They paint it like a technological innovation, like it's a revolution in finance. No. Indexing has existed for 200 years.
PANW live on CNBC.
It's not
PANW.
Definitely link it out to she has bought
the
more Palo
reason
Alto
that it
networks.
didn't, people didn't do it until the 1980s is because it didn't work. It didn't work for 20, 30, 40 years
Papa
before
Alpha
that.
November.
Why didn't it work? Because 1968 to 1982, interest rates went from 3%
This
to
IPO
20%.
was 14x
And guess what?
oversubscribed.
The stock market went nowhere for
Also, a quick
14
sorry
years.
to
Yeah, the
all
Dow went
your
from
Nick fans
1,000 to
out
1,000.
But it lost
Revenue.
70% in real terms. All
in
the numbers that you
2024
just
was-
gave in terms of returns were nominal.
Right.
What about the inflation part, right? And we'll get to that in a second. But the point is, in real terms, I think at this point, given the populist trends and the rebalancing and everything we've seen this happen before and forward during these periods.
Right.
You get negative real returns for long periods of time. And passive investing is the absolute worst place to be. In a regime change, right? What matters is the types of things. Last thing I would say about Schiller, like fundamentals, and you cited a lot of fundamental kind of metrics and why you think we're heading. I don't think fundamentals, like you said, the CAPE ratio, are not predictive in the short term. But what they are great risk management tools.
Right.
I've used this metaphor before, but it's like an airplane. If an airplane's got liquidity, if its engine's going, it's got gas, how far off the ground it is doesn't matter. It's how many buyers and sellers, how much lift there is, to the airplane.
Right.
But what happens when that engine goes put, and the liquidity dries up? And that's what inflation is. That's what long-term bonds going higher is. It's liquidity coming off the table. And when liquidity comes off the table, what happens?
It's true.
All of a sudden, nobody's looked at that elevation thing for a long time.
WKEY updates on
All that matters is how far off the ground you are. And those are the periods where all of a sudden we get massive corrections and fundamentals. And that's when Warren Buffett, guess what?
There it is. Wise Key knew that they needed a freaking headline right here.
Investing work.
There it
That's
is.
when active management
Oh,
works.
it's a massive.
So yeah, it hasn't mattered.
Freaking
Passive
knew it.
investing works great if you're just liquidity. If we have unlimited fuel, where the
Can
planet
we
just
not
keep
have
going up.
shit spreads
Absolutely.
here, though?
From 66 to 82, as I mentioned, the Dow went from 1,000 to 1,000. Does that mean no one made money? No, there was the go-go area in the late 60s. There was Nifty 50 in the early 70s. There was the energy boom. There was, the metals boom. There were big themes that would go up 200-300%
Yeah, the noon
over
ticker?
several years.
Yeah, actually
and
it
then
was.
bust
Good
out,
call.
and another theme would come in.
MNTN.
And that was the way
WNT
they
and
all
open here.
invested.
Dip and
But
rip.
you're
Watch
right.
that
When
one.
we got to the 80s and 90s, when we got to the Fed lowering interest rates and then eventually printing money, it was just get your sale in the air.
Startup
buy
Anthropic,
the
The
Release
Fed
is
put,
flood
right?
You're right.
And that's the liquidity we've been talking about.
Right.
That is this. Whenever something goes wrong, the Fed would stimulate, do supply side economics, and juice equity markets, right? That's the liquidity. And guess what? That just creates an ever ongoing upward going plane. Now, why wouldn't the Fed do that again? Well, the Fed's kind of stuck now, right?
I think they're stuck for two reasons. One, I think they got to the end game of it, right, in the late 2020s or late 2010s, because we not only got the Fed to zero and printing money, we got Europe to negative interest rates, we got Japan to negative interest rates. By the way, Richard Sala and Sidney Homer wrote a book called A History of Interest Rates, 700 pages of tables showing interest rates back to 3000 BC. The last time that book was updated was 2005. There is not one syllable in that book about negative interest rates.
Yeah.
That is a new phenomenon that we learned in the last 10 years, which largely didn't work as far as being a stimulative to the economy. So one, they hit their logical limit. Second of all, what was coincidental with that from 20% to zero? Falling inflation. Well, if the inflation cycle has bottomed and turned with COVID, and I've often said that whenever you have a financial crisis or you have a recession, we had both in 2020, the economy changes. Now, change, I always like to warn, I'm not saying it got worse. I'm not saying it's dystopian. I'm saying it's different. The economy changed in 2020. If you want one example, remote work is a big example. It completely changed the nature of the labor market. With that change, we've got higher levels of inflation. The Fed cannot cut and print in an inflationary environment. And one example I'll give you is last year. September of last year, the Fed got worried about the labor market because we got that QEW, that revision of minus 818,000 jobs in early September. We had the SOM rule that went, the unemployment rate went to 4.3%, and that was supposed to trigger a recession. The Fed panicked. They cut rates 50 basis points in September. What happened right after that? 10-year yields went up 100 basis points.
Correct.
If you're not interested in fighting inflation, I'm not interested in owning your bonds. What could the Fed do right now to destroy the bond market? Cut rates.
Yeah, and that's why they're not cutting rates.
Right.
I think this is maybe the most critical point of all. What we learned very recently is when the market goes down, right, and it's worried due to tariffs and populism and where we're going.
Great,
that the
Phil.
Fed
Josh Brown discussing
likely
EQT
won't
now
come to the
on
rescue
CNBC
anymore
at
because they
Quebec Tango.
can't. Because they're stuck in a box dealing with inflation on one hand, right, and on the other hand, trying to support the economy. And the inflationary problem is the secular problem that is really the big story here.
Yeah, and just to give you an example of that, the day we're recording, I put out a tweet thread, or I guess an X-post thread, now you got to call it correctly. And what I said was, Polymarket, the big betting market, has a market that you could bet on whether or not there's going to be recession in 2025. It hit 70% this morning. Now, all that is, just as a quick aside, why I cite that, it's like looking at the point spread in a football game. Just because one team is a 3-point favorite over the other team doesn't mean they're going to win by 3 points, but it tells you how people are thinking, as opposed to if they're 15-point, favorite in the game. Well, 70% tells you how people are thinking, and that I think is an accurate representation of how they're thinking. It doesn't mean they're going to be right, but they're thinking that way. Now I look over at the Fed Fund futures. I see a 9% chance that the Fed's going to cut rates at the May 7th meeting. I see a 59% chance they're going to cut rates at the June meeting. Wait a minute. 70% chance of a recession. Shouldn't we be talking about a rate cut this afternoon? Why are we not talking about a rate cut for the next 90 days? Because of inflation.
I think recession, that word is, and there's so much packed into recession, right?
Right.
There can be all kinds of different kinds of recessions. And I think this one in particular, we've only seen the same kind for 40 years.
Right.
But this kind of recession, what we're talking about, is really taking from that top 10%, as we talked about, and giving to that bottom 40%.
Right.
And if we're going to do that means employment on the bottom will actually be quite strong, which is,
I would
means
suggest the one that
demand
gives you
will be quite strong. And by the way,
well, first off, you should be doing the free trial, right? So, but you need the one with the squawk. Whatever base plan gets you the squawk, that's going to give you normal chuck. Then you got to get the add-on, which is the high beta squawk. That's the most valuable one. Get it while you have the 2-week free trial. I think it's included in the 2-week free trial. But the high beta squawk is what makes Benzinga Benzinga. Normal Chuck, he'll occasionally give you a juicer. Back in the day, like 5 years ago, Normal Chuck was the juicer. But ever since they added high beta squawk, that has been transferred to him. High beta squawk is now the juicer, and Normal Chuck gives you like normal updates. Occasionally he'll give you a juicer, but not the breaking news. They've really consolidated the breaking news stuff that's going to move to high beta.
The reason we had inflation in the 60s and 70s is because we had an incredibly strong economy.
On
We talked about how poor
LII,
equity returns
increases
were
quarterly
and long bond
dividend and
returns.
stock
Right?
repurchase
For the 60s,
authorization.
30 seconds, man. Thanks for
Also,
that image.
on
Can't hold it back,
LAES,
man.
Seals SQ updates
70s?
on the negotiations to
confusing people
acquire
is-
100% of IC Alps.
This guy is Trade
That's,
Exchange.
that one's on LAES.
And this is why I have two news sources. Is because there's a little news on LAES, Benzinga didn't report it. And then that happens occasionally. So I just want more. I constantly say, if I could find a third news source that was good, it's not Bloomberg, I'd add it, because you can never have too many. Well, I guess you could. But
to learn that GDP growth in real terms was significantly stronger from 68 to 82 than it's been in the last 40 years. People think the stock market returns are a function of GDP and economic growth. Economic growth was way stronger during that time, and we lost 70% in real terms in the equity market.
Right.
Stocks are not a function of how strong
yeah,
the
Dread,
economy
that'll
is.
come someday.
They're a function first
That'll
and
come
foremost of
someday,
the
no doubt.
discount rate. What is this is why the Cape and Schiller looks at it relative to interest rates.
Right.
Guess what? In 1968, it was a 24 PE, right? And record profit margins. Guess what? In 1982, it was a 4.5 PE. What do they have in common? Well, the 20-year bond was 20% in 1982. That means a 21, 22% earnings yield for the S&P.
Monster.
In 1968, 24 meant, okay, foreign exchange. Guess what? The interest rate was 4 in 1968. The discount rate, that long-term bond inflation, is what determines the outcome first and foremost.
Yeah, crunch wrap,
equities.
nice
You
work.
know, and what's important to note
Did 'em.
about that is a lot of people will say, Besant said that the focus of the administration is the 10-year note.
Or no, you're telling me to
and
get
then
it?
you'll hear
Yeah, I got
people
enough
say,
money to
well,
afford
the Fed needs to cut
crunch
rates
wrap.
because
I don't
we've got
really
too
go
much
crunch
interest
wrap,
costs,
though.
They need interest rates down. And I'll go back to that famous
I
Jim
actually don't go
Carville
to
line from
Taco
30
Bell
years
anymore
ago.
because mine
When I
got
get
wiped out from
reincarnated, I want
Boeing.
to come back as
They
the
still
bond
haven't
market because you
rebuilt
can
it.
intimidate
Hell.
anybody. The bond market will do whatever the hell it
At least I
wants
don't
to
think they have
do,
it. It's been a while
regardless of
since I've been in that
Besant or
direction.
Trump or Powell want it to do. And to that point,
Order mud bugs?
if the economic growth
Not a
is
bad idea,
strong,
actually.
and if
even
inflation
think
is
of that.
sticky, it's going up in yield.
Yep.
And they can
Might be
do
a crawfish
all
week.
they want to try and stop it. They won't be able to stop it. It will go up. That
They
discount
will
rate
make it
will go-
worse if they stimulate cyclically,
Yeah,
as you mentioned.
I'll
yeah.
give you a quick example about making it worse. In 2022, we hit 9% inflation. The Fed was raising rates 75 basis points a meeting there for a while. What was the highest 10-year note the entire calendar year of 2022? It was 4.22%.
That's wild.
We're at 4.22% right now. Why is it that we never got much beyond 4.22%? Because if you're hiking at 75 a meeting, you're on the inflation train, and I can relax. When you back off is when I get worried.
And by the way, let's kind of ghost of Christmas future here. Think about this, right?
That's
We
wild.
know that one of the problems of inflation during the Nixon era was Arthur Burns being brought into the administration and them forcing monetary policy. That's what took inflation sky high. There were already the structural secular forces driven by Great Society program, Vietnam War,
Right.
OPEC crisis, all the things we know about. But it was really when Arthur Burns and federal monetary policy started stimulating in mass that things went crazy. What is Trump talking about, right? He's beating up Powell, trying to get that, Bess and him are trying to get supply side economics and Federal Reserve into the game so they can support the markets and they can pull off their policy. That's going to make the long-term bond, I agree with you, go dramatically higher and inflation skyrocket.
Yeah, and that's
Yep.
and that's the fear that they've got. That what is it that the market is worried about? It's worried about prices right now. What is it that the Fed is? What's holding the Fed back is prices. What is the Fed most concerned about right now? And I call this the Main Street Wall Street divide. Whenever I watch financial television, I see Wall Streeters on. They'll say growth is going down. There's a high percentage of inflation, of a recession, so the Fed's got to cut. That's the prescription the last 40 years. But why isn't it the Fed's cutting? Because there's this inflation problem. Main Street, when you ask a Wall Streeter what's happening with the economy, they say growth is weak, the Fed's got to cut. When you ask somebody on Main Street, the 65% that never went to college, what are you worried about? These tariffs are going to mean higher prices. And that means inflation. And the Fed is citing on that side. That's exactly what the Fed did in 2022. The first quarter of 2022 was negative GDP. The first quarter of 2025 is negative GDP. What did the Fed do after the first quarter of 2022? Hike because of inflation.
It's been a while.
And they kept long rates lower because remember they never got higher than
CTFC
422.
perpetual.
If they were to acquiesce
boy.
to Trump embezzlement and cut rates,
Mercer
I
says
think
crypto
you'd see the
perpetual
10-year
futures
skyrocket.
could
So I think
trade
the
in
big
US.
difference
Oh,
between
boy.
22 and now is we're getting to the 5-year anniversary of the low in interest rates, and there is a massive lag to interest rates. Right. You have to understand, like, it's not like interest long bonds go higher, right? And and then you start to get a slowdown. The effect is when people, the difference between debt and cash, they're
MNTN
both money,
5 minute.
is one has an expiration date. Well, guess what? The
Very
expiration
tight.
date of all that debt, all
It's
that
like
malinvestment,
24.19.
everything that happened in 2021, remember SPACs, right? All of that 2021 period is now beginning to come due, just starting to. So in terms of, never mind predicting out to the future, but supply and demand of the long end of the curve, there's a massive amount of refinancing and supply coming on the table. And right as that's happening, by the way, we have this, guess who the buyers of that debt are, right? Japan, China, Federal Reserve. All of a sudden the buyers are being either
A really
alienated
tight 5 minute.
or can't step into the
Off of
to the
VWAP
picture.
too would be like
And so
a
for
double
the next
bottom.
year, well, this is a very short time. We've been talking decade, right? For the next year, there is a supply and demand imbalance that's massive on the back end of the curve. There's a supply demand balance for equity and venture, right? As well. That's why you're seeing Mag 7 suffering the most, or tech in general and growth, right? These are the core problems underneath the market. And so what do you do about that? We've also, by the way, during this time, this was a problem before we started the tariff war, right? Now we've injected all of this uncertainty and volatility into the bond market, right? Swaps have blown out, right? We were talking about this before, like the basis trade has gone negative.
Right.
Like those are problems for liquidity, even in a balanced scenario. So I think there's a real, like 1 year, again, there's a reason they're trying to get
Really
the
wish
10-year
we would get
lower. It's not working. Actually,
a cut
when we
first.
saw this, when the market declined, what did we see? We saw the 10-year start to break out,
Right.
right? That's a canary in the coal mine.
So to give a perspective on, but the 10-year, September 18th of last year, when the Fed cut 50 basis points, the 10-year yield was 360. It's 420 right now. It's been 450 in the last 3 weeks. We're at 70% chance of recession. I'm going to repeat myself here. We're all worried that the economy is going to go down. Everybody's going to lose their job. Why aren't we at 340? Why aren't we at 3% right now? If we were at 360 last September and we're 420 right now. So obviously the bond market is worried about something. I think it's prices that it's really was the inflation of prices was worried about.
And to come in zoom in a little bit closer than a year, we're in a month here that's incredibly important. Today, after the close, 2 of the Mag 7 report. On the 1st, on May Day, Mayday, there's 2 other, Mag 7 reporting.
This
Then
was
May
8 days
2nd,
ago.
we get unemployment.
Right.
And May 13th, we get inflation. Now, these numbers keep coming, but this one is more important than any other number because it's the first one that's going to start you're going to start to hear about the effects of those tariffs.
Exactly. And really what you're starting to see is an unusual economy that I don't think I've ever seen. And that is the consensus opinion right now
DFDV
is
trying.
today, the end of April, the economy is okay. We've got growth. We've got jobs. We've got retail sales. But within 90 days, there's this big wall we're going to hit when tariffs kick in and kick prices higher. And we're going to slam into that wall. And we're going to see job losses. We're going to see economic
It's a
contraction.
5-minute cock right
I've never
now.
seen it where everybody said, we're okay now. But shortly, like in a period of weeks or a month or two, things are going to go bad or sideways or pear-shaped real fast. Now, whether they do or don't, I don't think I've ever seen. And that is the consensus opinion right now is today, the end of April, the economy is okay. We've got growth. We've got jobs. We've got retail sales. But within 90 days, there's this big wall we're going to hit when tariffs kick in and kick prices higher. And we're going to slam into that wall. And we're going to see job losses. We're going to see economic contraction. I've never seen it where everybody said, we're okay now. But shortly, like in a period of weeks or a month or two, things are going to go bad or sideways or pear-shaped real fast. Now, whether they do or don't is a different issue, but I've never seen it quite that way. And that's
Is that a
also
lot
part of
for
the
that area,
uncertainty
Gabino?
is that Liberation Day. So when people online, maybe up to online, will say to me, I'll say, look, I'm worried about inflation. They'll say, here's the inflation data. And I'll say, look, nothing that happened before April 2nd matters. That's why you were saying when we get these numbers with the reporting, what's most interesting about the economic reporting, just to kind of nuance into the earnings numbers, is not what they're reporting for the first quarter, because that ended 2 days before Liberation Day. It's their outlook.
Yep.
And
Exactly.
what you're seeing on Wall Street is second quarter earnings are going,
Yeah,
going straight down, because
Forgetting
all these companies are
computing
either
hitting
not
new
giving
highs,
you an outlook
1334,
or giving you a dire
up
outlook.
22%.
And so they're all worried. So it's almost like when people cite me statistics, I almost like to say, anything you cite me, well, look at what happened with today, the day we're recording, the core PCE came out. So what? That's a March number. That's
Right.
2 days before Liberation Day. It's what is it going to look like in April? What's it going to look like in May?
That's the problem right now, though, Good Banana, is people want to sell, and they want to sell it at inflated prices, and the buyer is way down here. And that's it's stagflation in the freaking housing market.
in June when those tariffs kick in. That's what everybody's worried about.
So since Liberation Day, which it was August,
April-
Yep, buyers can't afford the rate, 100%. And the sellers don't want to sell lower. Probably because they bought so high. They bought at the inflated price. Or they can't sell lower because then they have to buy, and they'd have to be buying at a jacked up price. So they're going to lose money on the transaction. And they can't do that. No one's forced to do anything. That's why we need a housing market crash somehow. That's why 2008 actually was good for the market. Reset everything. Sucked if you were on the wrong
Note, the
side of
Make
it.
America Healthy Again
Sucked
report has been published. Note, for information purposes, link to report has been posted in the high base walk chat room.
But the bubble popping had to happen. Same with tech. 2000. Had to happen.
Our GTI continued to spike here, up 22% now. Romeo Golf
Had to
Tango
reset that
India.
market.
April
And we're not getting a reset here in this environment. That's the problem. We got a lot of dead trees in the forest, and no forest fire has taken everything out yet. That's the problem.
second or not? Okay,
April 2nd,
Yeah.
and you know why it was the 2nd?
Yeah.
Because he knew he didn't want to do it on April Fool's.
Oh, that's right. That's right. Yeah. But it takes 30 days for
Property
a
tax
shipping
is
boat to go from
$16K a
China
year.
to LA. It takes
Jesus.
45 days.
Where do you live, Good
for
Banana?
by train that's left to reach Chicago
Right.
and Texas, right?
Right.
Takes 60 days for it to get to New York, right? So there is a 1 month to 2 month lag.
Frisco,
Right.
Texas.
And here we are,
Damn.
2 days
DFDV.
before we begin to start to see the actual
Right, and
effects.
the beginning of it.
The
And
begin- just the
that's-
beginning,
And that's
exactly.
what everybody's worried about, that in the pipeline, what is coming is all the prices are going to go way up.
Yep.
And that unit sales are going to go down because 65% of the country, doesn't have excess. Excuse me, a different statistic now. Bankrate does a statistic every year asking the public, can you come up with
This is a really good
$1,000
interview, by
in
the
an
way.
emergency? Your car breaks down, you need a new roof, medical emergency. And half the country says no. They'd either have to borrow from somebody or put it on a credit card. So if those prices are going to go up, they're buying less units is what they're going to buy. This is what everybody's afraid of. This is why we see this volatility in the markets. And this is why citing statistics up until the day we're recording doesn't matter, because they're all pre-Liberation Day statistics.
And now full circle to
DFDV
populism
popping
and
again here,
politics, right?
$52 at
What
the highs
happens
now,
when
up about
all of a sudden
45%. Delta Fox,
you start to
Delta
see
Victor.
these slowdowns and the
Oh, I
people
thought
start
that
to get
was
worried? Trump's first 100 days
51.96.
approval rating is the lowest we've
It's like,
seen
why did I lose money
since
on that?
World War II for the first 100 days.
That's
right.
why.
The angry hordes, which are already angry, that's kind of what brought kind of Trump to power, and it's the populism that for change. What happens now when we're in recession? Well, guess what? They're already starting to talk about whether it's Bannon or Trump himself now, starting to talk about changing the tax cuts to be more heavy, not just to the wealthy, but to individuals. Well, what happens with heavier fiscal spending? That's inflationary as well.
Yeah, exactly.
Right? So it's a we're on this flywheel that once it gets started, every time you in a slowdown do the issues are having, then you stimulate not monetarily, which is what we used to do, but you stimulate fiscally because that's what people are demanding.
So your statements are true, and they beg a question. Why is Trump doing this? And he said it the day before we're recording when he was interviewed in Michigan, is he talked about, well, prices are going to go up because there's going to be, all these
1186
tariffs.
level
And he
one
said, no,
ASC.
that's
Nano-X,
not true.
Nano-X imaging
You
at the
watch.
highs of the day
I'm
now.
paraphrasing
November,
what he said.
Oscar X-ray.
China's going to eat most of those tariffs. They're going
and
to
then OX.
pay most of those tariffs so that prices in the United States won't go up as much.
Company
Unpopular
reported their earnings
opinion.
this morning.
Whenever you
Came
get
out
to
with
being
an
an aging
earnings
empire,
beat.
like we are now,
That's and then
there's two
OX.
ways you fix an aging empire. Way one is you plunder your neighbors, and way two is you create either a slave class or an indentured servant class. Well, we seem to be doing both. Trump is talking about plundering our neighbors. Now, he's not talking about raising an army, invading them, but he's talking about Canada being the 51st state, taking over Panama. He wants Greenland back, and China will eat those costs on tariffs, plunder our neighbors. The left, the Democrat Party, is talking about an indentured servant class. We need migrants. We need people to do the jobs that people won't want to do at low wages and stuff like that, to bring them in as well. So really what we're hoping, or what Trump is hoping for, is that
Members, keep in
those
mind,
tariffs
coming
at
up at 1 p.m., we have
145%
that
on Chinese
10-year
goods
tips
is going to
auction.
be borne more by
That's at
China.
1 p.m.
Remember what I
Typically
said
gets
earlier,
released around
$5 trillion
101,
of
102
Now
p.m.
DFD
The final
does. This is
auction.
junk.
We can't really take our tax base from 5 to 7. Historically, what economists have found is historically for the last 80 years, our tax rate has been about 18% of GDP. When it gets much above 20, the economy really starts to sputter. When it gets much below about 16, you really start to see overheating. Well, we need about 23% of taxes to GDP if we want to maintain the spending. Where are we going to get it? We're going to get it from them. We're going to get it from China is where we're going to get it from.
I don't think the balancing the budget and the spending, I don't think that rhetoric is as important as I mentioned before, as you make it to be. I don't think it's inevitable also that an empire is in decline. I do think short-termism and the short political cycle and entities continuously doing what's good short-term and not doing what they need to do to maintain power. Look, at the end of the day, absolute power corrupts absolutely, and power can maintain power forever. Like Rome was in decline for 250 years.
Oh, yeah. If I said that the U.S. is an empire in decline, I'm talking about decades.
Yeah.
I'm talking about
decades
maybe a
Final
century.
trades, DAL Delta
I'm
Airlines,
not saying
MELI,
that we're
Mercado
in decline
Libre,
and we're gonna
TOST
be
Toast,
in the soup
IYE,
by the end of the year, or in
Energy
2 years.
ETF,
But
final
you could
trades
argue that
on
doesn't have to be in decline
CNBC.
even. I know I don't agree with Ray Dalio's necessarily like the end of the empire,
Right.
because the reality is, if you are still by far the most powerful country in the world, right? There are forces that are pulling you down, but you have the tools if you're able to get the correct leadership, right, to reverse those things. But what it involves is stopping the inertia, taking your short-term pain in order to fix the long-term problems. And I think that's, in a way, what we're trying to do. The question is, are we going to be able to attain it? And are we willing to take the pain? By the way, the pain can be a decade, 15 years of real pain and rebuilding, right? And that's the question. And the problem is, and you asked about Trump, why is he doing, like, at the end of the day, politicians and the current system demands they get reelected, so they cannot take 20-year bets without addressing
That's the truth right
the
there.
4-year cycle.
Right.
And that's really at the core of the problem here.
That's the damn truth.
And why is Trump, by the way, Trump came in with
no politician
Elon Musk
wants to be the one that makes the hard
Percent as his
decisions,
supply side,
because then you're not
Republican,
getting
big,
your party's not getting elected
side,
for freaking
and
20 years.
Simultaneously, this Letnick, a side of the party. And what's happened? As his approval ratings gone down, right? As the realities politically have come to the table, Elon's been pushed out, right? And the angry hordes have come for Eat the Rich, who is the wealthiest man in the world, much more than they've come for Trump so far.
Right. But I think what the angry hearts have to realize is that if you think the answer is, the definition of insanity is doing the same thing over and over again, expecting a different result. If you think the answer is tax the rich, tax the rich, tax the rich, we've tried that for 50 years and it doesn't work. So really, ultimately, what Trump is trying to say is there's somebody that's got even more money than the rich, and that's foreigners.
Right.
And we want to try and take it from them.
Right. And you
is
can
what we
exert
wanna
that
do.
power.
Reclaiming the
Right.
alien,
As
like-
but ideally you don't alienate your allies. Otherwise, you may be, and ideally you do it sooner rather than later, because if you do it in 10 years, you may not have that power, and it may be too late. And that is exactly what will accelerate the timeline from maybe it's not 200 years, maybe it's 20, 30 years, right? So, but I agree that this is a critical time, right? We're talking big picture cycle things here, right?
Right.
And so what's the trade? Let's as we get to the end and work our way to the exit here.
Remember the 10-year
how are we
tips
all gonna
auction?
make
The
the
one
most
issue was
amount
at
of
2.22%.
money, and benefit
It
from this
draws
scenario?
2.22%
environment with a bit
is
to
what
cover
we're in right now
at
because there is going to be no
2.36.
going back.
That's your
It's going to be
10-year tips
when
auction.
I say higher volatility environment, I mean we're going to go, from big swings to big swings. I said maybe that the stock market returns 6%. That doesn't mean that you can't have down 21 year, up 30 the next year. When you average out to 6 or something along those lines.
The ticker HNGE, Hinge Health, IPO is open, Hotel November Golf
if
Echo.
we're in a lower absolute return environment, I know that on the SIBO where we're recording, there's a heavy concentration of the volume is in the Mag 7 stocks.
Yep.
There's 2,000 others out there.
Yep.
And as we start to unfold in this period, you might want to start thinking about those other 1,993 stocks.
We've been in a world, right, essentially where it's all linear. Everything goes up together. The Federal Reserve and liquidity is what drives everything. You mentioned active management. It's also becoming increasingly non-linear, right? And that's why part of why volume on options is through the roof these days, right? It's because it allows you to take bets based on outcomes with much less risk, with much more convexity. And when you're in a regime change and you're in a big, environment change, you can make those bets much more directly, right, with options and different parts of the distribution. You can also do it in the bond market. I think the SIBO has, bond indexes and options on these products as well. So I think there's an incredible opportunity to really use some of these products to risk manage and to make
on HNGE
you've got
open
from 0 DTE all the way out to leaps. So you've got a whole maturity spectrum that you could go with. But that is the environment, because actually for an institution like the SIBO, I would argue this is a better environment, because what was the last environment? It was 3 instruments. It was just buy spiders and buy spiders because they always go up. Nothing can beat them.
Right.
And it was
a lot of compression here.
Era.
This is non-correlated investments, right?
Right.
And what are essentially at the end of the day, if you're playing different parts of the distribution, different products, right, in non-linear ways, that is a way, right?
Right.
To get non-correlated.
And I also think that the expectation too, because as a macro guy, the question I get most often, if I could summarize it, is some big multi-trillion-dollar asset class is going up 25% this year. Which one is it? And it's like, okay, I get why you ask the question, because most of the time in the past, it's always been some big multi-trillion-dollar asset class is going up. And I mean something bigger than gold. And, maybe now is the era where we don't have that.
Right.
And so how do I get those big returns? You have to start, decentralizing your thinking instead of centralizing your thinking into the big indexes, and start thinking that way. Now, the problem everybody faces is a lot of people go, yeah, that makes sense. You've never had to do it before.
Well, the inertia, right?
Yeah.
But you don't want to be the last one out the door, I'll tell you that.
Right.
But 60-40, just being long stocks and long-term bonds, how'd that work out 68 to 82? Or, how'd that work out, all these other times you've had inflation periods?
It worked great from 2009 to 2022.
Right.
We're
not there anymore.
Yeah. Right. From 68 to 82, that was a disaster type of
So there's 2 ways to solve that, right? One is to take down your stock and bond exposure and go into non-correlated investments.
Mm-hmm.
Or the other one is to hedge out your exposure, right, to the long-term bond and inflation, right, and drive non-linear outcomes to offset that exposure. But either way, you need non-correlated or inversely correlated kind of
right. And the thing is, we're talking about the markets are in a state of flux right now because
IONQ
we're shifting
new
from
highs
one
now,
regime to another regime, and that's the volatility we're seeing. And like I argued, we can't go back. So we're going to continue to go into this type of environment. Now, with that said, if you don't like the volatility, you could also look at very safe investments like cash, or you could look at very safe investments like bonds that can give you most of the riskier market returns with less volatility.
Which bonds, though? If you go to long bond, interest rates go up 3-4%. You're going to lose 80%, 70, 60, 70, 80% of your money.
And if you go too much into credit, you're going to wind up losing. If we have
Which is correlated with a long
credit is very cyclical, right? Because credit will wind up being very poor investment when the economy turns down. If we have a 70% chance of a recession, then a lot of these companies are going to have to restructure their credit, which means you lose, on a restructuring. So, yeah, I think investment grade bonds, but mainly, the benefit you have in the bond market right now is the yield curve is still very flat. So you could be in very short-term maturities, very low duration, and get about the same yield as you would get in long-term maturities. The thing that, you'd want to be in long-term maturities historically was, well, if we're going to go into recession, it'll be a big bond rally. There isn't one now.
Yeah,
and that's
the equity market. All assets are now correlated to the long-term bond.
Right.
Yeah.
I've actually argued that if you look at the last couple of months, and it's been a bit of an outside-the-box thinking, everybody thinks that the whole world turns on tweets and tariff talk, and to some extent it does. But really what I also think is another constant is, what are yields doing? When yields go up, the stock market struggles, and when yields go down, the stock market does better. Why are we been recovering for the last couple of weeks? We've gone from 458 on the 10-year note to 420 on the 10-year note. And so what the market really wants is cheap money. It always wants cheap money.
The problem is with inflation, you can't keep that unnaturally low,
right?
Or you drive more inflation.
Right.
That's
With no inflation in 2010 to 2022, you could go
Now,
to zero and print money.
At
You could get away with
39.16.
it. But with inflation,
HNGE.
as we said with September, you want to get the long bond. You want to get the long bond above 6. You want to get the 10-year above 6. Do what Trump has asked. Cut rates. Start talking about cutting rates. Talk about printing money.
Yep.
The long bond will go vertical in yield if you do it in this environment right now.
Completely agree. Mayday.
Yeah,
right?
exactly.
Wonderful having you here today,
you.
Jim. Thanks
That
for
was
joining.
really
Incredible
good.
Conversation. And
That was a really good one. I might have to watch that again when I can really pay attention. That was a really good interview. Can I link it? Nice work, Zero. Here's a retest. That's a good point, Cheese. Dude, today is one of those days where you just feel like everything is working. It is. It is one of those days where everything is working. My biggest loser is $100 on COSM. And I think that's all fees, if I'm not mistaken. This is why I say you don't need to put goals on how much you need to make on the day. Say your goal was $500 on the day. I would miss out on this amazing day where literally everything is worked. Everything. Because I made my $500 and I went home. Whereas if you were trading on the worst day of the year, and you still didn't make your $500 and everything you took a trade on went red, you'd be still trading it. Hopefully you have a daily stop loss where you stop out, but yeah, I don't like putting limits on profits. Like 0 cents. Oh, made my $500. That's it. That's all that's out there. That's like getting up to go fishing. You drive 40 miles offshore. You throw your poles out there. This is a bad example because it's not how you do it, but you get my drift. Oh, I got a fish on the first line. Cut all the other lines. Let's go home. Just cut them. But there's a fish on that. Nope. Got mine. Got my one fish. That was my goal. Cut all the lines. Let's go home. 120 miles minimum. Jeez. Curious, obviously you don't intend to trade forever. What's your plan for retirement? Surely not relying on your bowling shoes. I don't know. I don't see myself stopping anytime soon, that's for sure. But as far as retirement, I mean, I have accounts that I try to grow as well. Trying to stack. You know, if I ever get to where this account is like, let's just call it something stupid, $5 million. I don't know why it would be 5 million, but we'll just call it that. Then it's a different kind of trading I'd have to be doing with it. It's not the day trading this stuff. It'd be put it in the big boys at big levels and trading for an hour or 30 minutes at that. It's just a different type of trading. Futures, yeah. That would definitely probably be it. When I can't scale this account, like I'm still scaling. Like you see me today, most of my trades are 4,000 shares. You know, when I get to the point when I can't scale that anymore, and you know, your trades start really influencing the volume of Cali, IO, and Q. Jeez. Yeah, that's when I have to switch to a different vehicle. But that's why I'm trying to learn other things, because that, you know, futures for one thing, I want to learn because of the tax benefit, but it's also where eventually the playground I will need to be in. That's why I switched to mid-large caps. Yeah, I believe it. Nick also mentions that the small caps, there's just so many computers and algos in it these days, and it's true. Like, not so much on ASST today, but when you start seeing those tickers that are just moving and should break out, but you know, they break and then dump a 25% move drop in 5 seconds, like that's horseshit. That's the stuff that you don't get really in the large and mid caps. I remember your daily 5-figure days in 2021. Yeah, that was wild. That's just a wild market. I mean, there was so much money being pumped into the market. PBBY, yeah. That was an $82,000. Actually, it was like a $60,000 trade, but it was an $82,000 day, or $84,000. And see, if you ever had a year like that, would you buy more rock and dirt, or do you have a major home plan? I would not. So my house is good right now. If I had another breakout year, I would definitely put the money to work. The problem I had is I put my money to work on my home, which is great because it increased its value. However, that money's not going to work. Now that's my problem. That money's locked in. And I don't foresee myself selling this house. So it's like a waste. I mean, I'm enjoying it, but I'm not making money off of it. So any future money that I make, if I make a big year or whatever, that money's going to work. NFTs had to cost you a couple bucks, right? 20, that's true. Duber kit. Does that mean the reward is delayed again? No. Okay. What's going on here? Just bouncing off of yesterday's close. IO&Q, another break here. Unbelievable. %17% short interest. Bet you that has a lot to do with this move. What's my tax bracket? The top one. Yeah, I have a solo plan, which I really need to look in a better option because my healthcare is insane. Like, I got to figure that out. Yeah, it is expensive as shit. And I don't go to the doctor. Yeah, that's about right. Good banana. Yeah, I have a health savings account. You have an S corp, and you only pay $300 a month for insurance. I gotta look into that. Wait, can I do an S corp? How can we be on your will? DM. put you as a dependent, but I want tax credit. I have to renegotiate every 2 years. It's worth the hassle. I went from being an accountant to day trading. The tax planning was the most exciting part of the transition, not joking. Huh? Benny wants 112. Sure does. New all-time highs right now, boys. What's Mara doing? He went lower? Jeez. Dalio? Nope. Did not see it. Oh, man. We should be afraid of the bond market. Yeah, we should be. MNTN coming back up. Jugs is on. Dinner with Trump coin peeps. Is that what she's talking about? See if we get this 24-20 break.
Woke up late, screens all red. Slammed some caffeine, cleared my head. Clicked in fast, snot that dip. Now I'm moonwalking in my flip. They're in suits, I'm in my robe. They overthink, I probe the probe. While they hedge, I hit and run. Another rap before the lunch bell's done. 300 by the break of noon.
That's legit.
To the market's tune. I'm 50%, they're full of regret. Sweating bullets while I'm placing bets. They got yachts, I got my share. But I'm the one who's eating rare. Tell BlackRock to kiss the screen. I'm just
Oh, we cracked over 24 there for a second.
CNBC said play it safe, but I went full send, no breaks. Their drawdowns look like cliffside falls. My candles look like wrecking balls. Click, 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 the algo cries. They shorted low,
Just getting
I
out.
bought the highs.
Didn't break out
See
how
the
I
fear
thought.
inside their charts, but I'm just vibing, throwing darts. Yeah, I'm a one-man institution, trading chaos like it's fusion. They got stress, I got the beat of living.
Hey, we got a W. 2405.
By the break of noon, I'm dancing to the market's tune. I'm 50%, they're full of regret. Sweating bullets while I'm placing bets. They got yachts, I got my share, but I'm the one who's eating rare. Tell BlackRock to kiss the screen. I'm just me, but I'm printing green. Printing green. I don't need your bluebird feed. I've got charts and gamma green. This is how we hedge fund crash. From mom's basement making cash.
Such a good song. Mm. LTRY just put out a headline. Two minutes ago. They're sponsoring IndyCar, the Indy 500. Do I use mouse or touchpad? Mouse, bro. So 5-minute cuck here on MNTN. It's not doing much. If this holds up, it's buyers down here. Damn. Got a couple levels. It's 2405 is the big one. I should buy UNH because I'm a contrarian. I bought at 273 and seeing it level off was seeing if I should sell and take 10% gains or let it rip back to 450 plus by end of year and let it right. I don't like the man, that was the time to sell there. Right up against, you know, I said it then, but that was the time against the 9 EMA. You still have the issues of them getting rid of their guidance. They don't know what they're doing. They overpaid whatever. And has it been confirmed that they're being looked at for Medicare fraud? Like, there's just too much.
Coming up, Feds Williams.
CMS
At 2
boosts
p.m.
audit team. That's why it dropped the other day. So I don't know. Like, wife said CMS thing is big. I agree. I bet it is. So I just think there's too much negative. From a technical standpoint, I mean, this is making lower highs and lower lows. Well, not yet lower lows, but if I was in the trade, I would have sold here. But if I was still in the trade and I was profitable, I'd take the win and find a better looking stock with not so much like headline risk. 112. Yeah. There's just too much mystery right now. Yeah. Do I like ASTS long term? I don't know anything about the company. Let me put that out there. A lot of consolidation going on. This is a big level. Space Mobile. I don't know anything about them, so I can't really comment. Technically, it looks okay. Big old move up and sideways action since. Going on a year of sideways action. Can't be on trade. Let's do another banger.
Yo! We printing all week long, baby. It's Friday.
It's not Friday. It's Thursday.
You know what that means? Let's get stupid! Blew up my port in a good way, bro. Costs hit like rockets, I'm ready to blow. Margin max, champagne tax. Just bought a yacht off one spec. Cocaine color Lambo on the street. Tossing hundos like I'm handing out receipts. Text girl dancing in my chair. SC might call, I don't even care.
All day, party all night. Sold the dip, then bought the spike. Options printed, jawline tight. Let's black out under strobe light.
It's a day we go wild. Champagne charts, we live in vile. Bulls in heat, bears exile. Party like it's illegal. Stock jocks, it's a day we go wild. Trading floor looking like girls go wild. Moon and profits testify. We making money and making it loud.
Woke up naked, limit filled. Broker texted, bro, you killed. Faxed my gains to my ex, just caused, then snorted stems off compliance laws. Blew a gasket on my G-Wagon, tried to shorten the sun, ended up dragging. Bought the top, sold the rip, lit a blunt with the 10Q script.
Yeah, we throwing phones, yeah, we yelling, feel me. Tore my suit while riding silly. HR quit, we threw a milli.
It's a day we go wild. Screens glow red, but we still smile up. 10 bands in a single trial. I made my ticker wedding style. It's a day we go wild. Trade desk thumping, vibes compiled. CK on hold out, toned out. We making legends, not just files.
Told my CPA, do the math, she fainted halfway through my path. Private jet, just for lunch. Blew 6 figs on a power crunch. My intern cried, said this ain't legal. I made her mod my Discord sequel. Stainings hitting vibes elite. Got banned from Slack for sending feet. Go. Spilled tequila on my Bloomberg screen. Made it rain on a Zoom now.
What a great line. Got banned from Slack for sending feet pics.
That's obscene. HR filed a form I lit. They bought a silence with a candle lit. Spot split my tick. I'm on the chart. Said yes. Whole desk looked like a rave in distress. Final bell rings. We reload clips. Party bus park next to my puts and dips. Snort and blow off the ass cracker short sellers. Looks like candy. We some rich fin fellas. Ran 3 laps from the house but naked. Neighbors called the cops but they're too outdated. I'm so green. I'm glowing neon. Lit like cars on a camera squeezy on. We so rich, man. F the world. They can kiss our tank while we moon this pearl. We came from nothing. Now my desk made of diamonds, blood in my pen. Every candle a climax, every trade is a sin. I hear the market breathing, whispering wind. Heart rate rising, hold up, let it begin. Pulsing my ears like a ticking bomb. Tick a moaning, I'm the fucking Dom. Volatility dripping like Dom Perignon. I'm not trading, I'm turning God's on. Count it down, 3, 2. It's a dream, we go wild. Champagne charts, we live in vile. Bulls in heat, bears exile.
Calling it here,
like it's illegal.
Damn it, Yertle. What's up, Dan? Massive day, $7,300. Let's go. I'd watch this MNTN 5 minute if you're sticking around. Absolute banger of a day. We'll be back at it tomorrow. Finish out the week. We're gonna go raid go ahead, dude, Rebecca.
It's a dream, we go wild. Champagne charts, we live in vile. Bulls in heat, bears exile.
Velcro and Kelman, damn right. Gonna need the extra sticky stuff. See you tomorrow.